Hi, this is James Shug with Westpac London's end of day report for Wednesday the 2nd of May. Well, European markets were marked lower, but very sharply lower in fact in some of the continental markets back from yesterday's May Day holiday, and sentiment was actually negative pretty much right around the Northern Hemisphere today. The mood was set, the negative mood was set and trained by European figures which showed Euroland unemployment rise to 10.9%. That's the equal highest that it's been for, well, since the 90s, since before the euro was even in existence, but they've backcast the figures as if those euro countries were in one aggregate, and it's matching the high point from several decades ago, and still rising. The factory PMI for April for Europe was revised down a tick from 46.0 to 45.9. That's the lowest it's been, lowest since June 2009, and about the level it was running at the end of the second quarter of recession in 2008. So very much at recessionary levels, and suggesting that when GDP numbers are released for the first quarter on May the 15th, they might show another negative, even if it's not as steep as the minus 0.3% loss that we saw, contraction in GDP that we saw in Q4. There were a few bits and pieces out in the UK, but nothing really outstanding there, other than the construction PMI for April, which eased slightly from 56.7 to 55.8, but still well above 50. Certainly no evidence there of the 3% slump in construction output reported by the ONS in the Q1 GDP figures at the end of April. So a bit more evidence that just maybe we're going to see an upward revision to that number, perhaps later on this month or later next month when we get the final read on Q1 GDP. So UK in recession, we think, but maybe not quite as steep as or deep as the figures currently imply. And then moving on to the US, the main number there was the ADP private payrolls report for April. They found 119,000 new jobs. That's their slowest gain since September last year. It compares to quarterly averages through the fourth quarter last year and the first quarter of this year of in excess of 200,000. So nearly a slowdown in the growth pace by about a half. So that's another indicator that the labour market has softened in the US. We saw it in March payrolls, we've seen it in jobless claims, although an element of the ADP number is they tweak it a bit, adjusting it for what jobless claims have been doing. But also most of the business surveys, the New York PMI came out today. It was down, from 67 to 61, still quite high, but nevertheless turning sharply lower, in contrast to the national ISM factory survey yesterday. So I think on balance most of the data is softening as we head into the second quarter in the US, although as I say there have been some exceptions. They're probably the main points to make in terms of the data. We had Richmond Fed's Lacker say that he reckons that rates in the US will go up next year. He's one of the voters on the FOMC this year, and he's been dissenting against the language in the statement that the Fed's going to keep interest rates at exceptionally low levels until the end of 2014. Well, we'll see on that. Our view at Westpac is that rates will indeed remain low for a long time, and one of the reasons is that the economy is going to continue to struggle with 2% probably the maximum growth rate we're going to see in any year in the near term, compared to the sort of 3% consensus of US forecasts that you see out there, particularly amongst Fed officials themselves. Okay, so that's it in terms of today's news. In terms of markets, the FTSE in London are down 0.9% today. The French market up 0.4%, the exception in Europe. The Germans down 0.75% today. The Spanish down 2.6% today, sorry, and the Italians down 2.6% as well. Now, the Spanish market actually hit a 3-year low today. Contrast that with the US market, which hit a 4-year high yesterday. Although at the moment the Dow's actually off 0.2%, so just off that 4-year high at 13,253. In commodity markets, they're looking negative today. Gold's off 0.6% at $1,652 an ounce. Oil was down 0.75% at $105.36 a barrel, and we've got copper down 1.5% at 379 cents a pound. And the Aussie dollar's at 1.031 against the US dollar, a little bit softer, hasn't moved. Oh, well, it's moved a bit intraday, but not much different from when I reported yesterday. Okay, for any Kiwis out there, you've got your jobs numbers coming up tonight. For the Aussies, you've got to wait till the Reserve Bank's monetary policy statement on Friday for more guidance about your local economy. But watch for the ECB's press conference Thursday, that's tomorrow my time, where we've got an inkling that the ECB president might hint at a rate cut, perhaps even as soon as the June meeting. Okay, so that's the main event I'll be watching for tomorrow. Okay, and I'll be back to report at the same time then.